Welcome back to Lunar Beaches Crypto, where we ride the waves of the crypto market all the way to the moon. This is the final video of the foundation of the trading course, yeah. So, in a future video, we'll go over, we'll expand on all of these, of course. But for now, we've got our foundation built. Just to recap everything that we've gone over. We've gone over market structure, we've gone over supply and demand, we've gone over reaction to levels, we've gone over volume, we've gone over VWAP and Fibonacci, and we've gone over confluence. But what most traders fail to do is turn all of those pieces into a repeatable process. And that's what this video is going to be about. It's not a secret setup. It's not a guaranteed strategy. It's a model you can follow the same way every single time. So what is a model? So a trading model is a decision framework. It's almost like a decision tree type of deal. So it answers one question, which is, should I take this trade or not? If the criteria is met, you act. If they aren't, you don't. So there's no improvising. There's no forcing trades. That's not what we do. Okay. We want to have a consistent model that we use day in and day out. Okay. So the model that we've gone through so far is we've gone through structures, which is for our direction. So are we in a bullish or bearish or ranging market? Is structure shifting or is it still intact? If the structure is unclear, there is no trade. We've gone over location. So this is where price matters most, which is where, like, is price at supply or demand? Is it VWAP or is VWAP or anchored VWAP nearby? Where are we relative above or below VWAP? Is this a meaningful area or the middle of nowhere? So we don't trade in the middle. We don't trade in the middle of a range. Now, to break that down a little bit more, to be more specific, say you missed this short and price is already breaking down somewhere over here. We're not going to be looking for a short trade because we're in the middle of the range, of this range, and we have demand right here. So, I mean, it's not really worth it to take the trade, and it's just a low probability move because who knows? You might just sweep this internal low and then push up, and next thing you know, you're stopped out of your trade. So we want to look for the most probable setups. So reaction. So this is about acceptance or rejection. So do we get acceptance into a level? Do we reject the level? Is price rejecting the level with urgency, or is it grinding through it with acceptance? We went over that in a prior video. Make sure you go back and watch the full course if you haven't already. Touching a level doesn't mean anything. How it reacts means everything. So just keep that in mind. And then lastly, confirmation. This is confluence. This is what we went over in the last video, which is confluence. Does volume support the move? Does Fibonacci align with the pullback? Do multiple tools tell you the same story, basically? So no single tool is the strategy. Agreement is our edge, okay? So, it's also, risk management is also like one of the biggest things, okay? So it's important to know your risk. For me, it's 1% to 2% per trade. If I'm going with the trend, it's going to be more that 2%. If I'm going against, let me rephrase. If I'm going with the high time frame trend, it's that 2%. If I'm going against it, it's the 1%. So here on this specific trade, this would be a 2% trade with me. Why 2% risk? Why? It's like, well, aren't you going against the trend? The low time frame trend, sure. But the high time frame trend, no. The high time frame trend on this is a down move. We are trending downwards. So if I'm looking for a pullback for continuation down, I'm going to use that 2%. It's just my own personal rule. It's not something you have to follow. That's just something that I do. Not financial advice. None of this is financial advice. It's all trading education. And that's it. So and that's it. And then you have to figure out the math on everything. Like this is a 0.67% risk on my stop loss. Figure out the math of that based on your account size, 2% of that account size. So let's just say like it's $1,000 account. Therefore, I'm risking $20. And so on 5x leverage, $20 risk would mean on a let's just say 0.5%, just to make math easy. You're looking at a $4,000 trade, which means on 5x leverage, you're using $800. And so that $800, that 0.5%, you're going to risk, on $4,000, 0.5%, we're going to be using $800 of margin on that trade. This is why I like exchanges that provide calculators, because they just make it a lot easier than having to do all the math in head. But if you need any further guidance on calculating risk, join the Discord. We'll get you situated. Okay. So once you've got your risk set up, you apply the model. This trade only exists because you're aligned with direction. Price pulled back into a key zone. VWAP, anchor VWAP overlapped an area. Fibonacci retracement refined the entry, and volume confirmed rejections. Okay, so the math comes after the setup, not before. So just remember that. So once we got these set up out, it's like, okay, I'm risking this much. Here's 0.5%, just above this high. A little bit riskier than taking this high. But again, we're trying to do simple math. And that's it. I mean, just base it off of your stop loss. I mean, that's really what it is. Just base your risk off your stop loss, and then just be consistent with that. And that's the main key. 90% of traders fail because simply they're just not consistent. Trading should be boring. You should be doing the same thing every single day. It's not It's not every time you have a 5-loss streak. It's like, oh, well, I guess I gotta change my strategy. It's like, no, we don't need to change the strategy, unless it's just like never worked before. But just following the concepts in this course alone, I mean, you should get some really high probability trades. And I mean, anything over 50% is pretty solid win rate, that is. So, and just being consistent with that. So if you have like a 2-to-1 setup, now like a 1-to-1, 50% is not going to be as nice. Okay. But if you use like a 2-to-1 or a 3-to-1, then in the long term, you're going to be profitable. Okay. If you have a more than 50% win rate, it's even better. So try to find you a setup that gives you a 50% or more win rate over hundreds of trades. Okay, that is what matters. You will have losing streaks. Okay, this is why we protect our capital with stop losses. So we protect our capital with stop losses, and we make sure our wins are bigger than our losses. And over time, that's how you become profitable. So sticking to your strategy, your model, and it's not even necessarily just strategy. It's like your whole trading model. I mean, it's from beginning to end. That's your model. From marking off market structure to marking off supply and demand to Fibonacci to setting up the trade, all of that is your working model, okay? And so you just have to use that consistently, and over time, it'll play out, okay? So when not to trade is just when the structure is unclear, price is in the middle of a range, you have conflicting signals, or low participation even. So not trading is a valid decision. Consistency matters more than anything. One trade doesn't matter. 10 trades don't matter. What matters is repeating the same process, managing risk consistently, and letting probability play out over time. So this is how edges actually work. So yeah, so that's it, guys. This course doesn't give you predictions. It gives you a framework. And from here, your job is simple. Practice, journal, and stay consistent. Clarity beats complexity every single time. You keep it simple, you stay consistent, you use proper risk management, and you should, can't speak in absolutes, you should be profitable over time. So I hope you all enjoyed this course. I hope it helps you build a foundation for your trading, and we will expand on it later. But for now, that's going to be it. Thank you all for tuning in, for watching the course, and let me know in the comments if you got anything from it. And comments, questions, concerns. Join the Discord if you have any questions. I will be happy to answer all of them, and to the best of my ability. And yeah, that's going to be it, guys. So thank you so much. I will see you guys later. Like, subscribe, share, hit the notification bell, all that good jazz. And yeah, mad love. Peace out. God bless. Ride the waves. Bye.